Okay, good morning, everybody, and welcome to this Natural Capital Ireland Business, Biodiversity and Finance webinar. I'm Jane Stout, and I'm a professor in the School of Natural Sciences at Trinity College Dublin, and I'm chair of the board of Natural Capital Ireland. And I'm just going to give a short introduction and then introduce you to our three speakers for this morning. Excuse me. So for those of you that don't know, Natural Capital Ireland formerly was the organisation called the Irish Forum for Natural Capital. It's a non-profit company leading the conversation on natural capital in Ireland. We've got more than 850 members in our organisation, and it's led by a cross-sectoral steering group with representatives from government departments, from government agencies, from semi-state organisations, academia, business, and more. And Natural Capital Ireland is currently funded by 2 government departments. And what we do in Natural Capital Ireland is we connect members with experts to advance their projects in the natural capital sphere. So, for example, this photograph here is where we introduced Bordish Gemara to international experts on natural capital accounting to enable them to apply natural capital accounting to their sector. As well as connecting people, we deliver high-profile events. For example, the National Biodiversity Conference that we organised in Dublin Castle 2 years ago now, which we co-hosted with the National Parks and Wildlife Service. And our high-profile speakers included President Michael D. Higgins, shown here on the slide, and also the head of the IUCN, Inga Anderson, and the head of the Natural Capital Unit in the European Commission. We also build capacity by producing accessible resources, so blogs, videos, glossaries, to help people learn about natural capital, and all of these resources are shared freely on our website and through our various social media channels. And we'll give you details at the end of the webinar this morning on how you can access the social media channels on the website. And we advance the natural capital agenda in Ireland by doing original research. So we're involved in the EPA-funded InCase project, which is a project that's piloting natural capital accounting in Ireland, starting at a catchment scale and scaling up and down from that. And we also contribute to policy consultations. For example, we contribute to the National Planning Framework, and this is an important part of our role, is to contribute to these policies and these policy consultations. So that's who we are at Natural Capital Ireland. So the agenda for this morning, we have 3 excellent speakers, really looking forward to hearing these short talks this morning. What we're doing in this session this morning is we're not going to be talking about the importance of biodiversity or the current crisis that we're facing in biodiversity. We're going to assume that our audience knows that this morning. We're going to focus on these 3 studies that are related to biodiversity in the business and the finance world. So we've got 3 excellent speakers, and then at the end of the session, we'll have Q&A. The Q&A, if you're in the Zoom webinar, then you can enter the Q&A via the Q&A button, which is at the bottom of your Zoom screen. If you're joining us via the YouTube live stream, you can also enter questions that way as well. And what we'll do at the end is we'll review both of those streams of questions and put questions to our speakers. So we'll take all of the questions at the end, but please feel free to enter questions into the functions as we go through the talk. So that's my brief introduction. I will now hand over to our first speaker, so Mark van Oorschot, and apologies for the terrible mangling of your name there, Mark. And Mark is from PBL, Netherlands Environmental Assessment Agency, and he will be talking about the Indebted to Nature project and report. So over to you, Mark. Thank you.
Yeah, thank you. Hope you're hearing me right now. Yeah, is that okay, Jane?
That's perfect, Mark.
Okay,
Thank
good.
you.
Just checking. Yeah, thanks a lot. Yeah, I'm going to talk to you about this study we did at PBL. PBL is sort of EPA for the Netherlands, so to speak. And we did a study last year with DNB, it's the Nederlandse Bank, which is the Dutch bank. It's a central bank, so not a true bank where you can go for loans or whatever, but a supervisory authority that's main task is to look after the financial stability of the Dutch financial system. So the stability of the financial system. So we did a study indebted to nature, where we explored all kinds of risks that come from biodiversity loss and how these risks affect the financial markets. So next slide, please. Yeah, that's the indebted to nature. Next. Okay, so this was not the first study they did on these types of subject. It was more or less a sort of a sequel. They explored, the Dutch Central Bank explored the risk exposure to several of the subjects that we now call Sustainable Development Goals. They started off with climate change, how that affects the financial market in Holland. There was a report called Waterproof in 2017, and of course Holland is a country that is very much under pressure of water and dikes and levees, and so there you can imagine there are all kinds of risks related to climate change. As a follow-up, they explored a broader set of Sustainable Development Goals. That report was called Values at Risk from 2019, and they investigated the consequences of water stress for all kinds of individual companies, resource scarcity, human rights, and they touched upon biodiversity a little bit, saying that biodiversity is a complex subject that they couldn't analyze in the full width. So at that point, we thought there was an excellent opportunity to join forces. So DNB and PBL got together, and it was a very, let's say, it was a sort of cross-pollination, so to speak. So we came up with all kinds of nature-related and biodiversity stuff, and they talked to us about financial risk, and we tried to figure and try to connect these two different disciplines. So that resulted in this indebted to nature study. Next slide, please, Jen. Yeah, this is the biodiversity agenda put forward by several reports by IPBES in 2019, which is a sort of IPCC, but then for biodiversity, and also at the World Economic Forum starting 2020. And they put up biodiversity loss as one of the serious risks working globally that also have an enormous impact on economy. So biodiversity was on the rise in their awareness, showing in these graphs where the black square was moving up. By the way, no, this is high up, so it is really worth investigating. They also listed infectious diseases even lower, but that again shows that we should not underestimate the possible consequences of these kind of things, as we know now. Okay, let's move on. So we started talking with people from the Dutch National Bank. They supervise the banks, which are depicted now at the top of this figure, and that invest themselves their money in terms of loans, shares, equities, bonds, whatever, to companies in different sectors. And these companies, they have several relationships with what we call biodiversity or natural capital. On one side, of course, they have their impacts because of their processes. They impact the quality of biodiversity. So biodiversity usually goes down through all kinds of pressures like pollution, overexploitation, land use. But at the same time, they also depend, these companies, on what nature provides them in terms of all kinds of services and goods. And that's the idea of looking at nature as a natural capital source. That's depicted by these other elements of bees that serve pollination for crop growth. Soil fertility, for instance, that's the basis for plants to grow, and that's the basis for our food. Green leaves and trees store CO2 so it has a regulating function as well. and water provision is also a function of ecosystem. So these are more or less the dual types of relationships that we see between sectors and nature. And with these impacts, we can identify all kinds of risks that are relevant for finance, which are transition risks that have to do with changing policies, government policies that are in place to protect nature or conserve nature. That puts limit on all kinds of industrial processes. And all kinds of reputational risks when companies impact in a way on ecosystems that we don't think is acceptable. Of course, that creates reputational risks, and that puts the money invested under pressure. And on the other side, we have physical risks when these natural processes that deliver goods and services to companies are disrupted by ecosystem degradation and biodiversity loss. Then you might have all kinds of problems in the operational processes, and that also leads to all kinds of risks. You can dive into further in these relationships. Next slide, Jane. I will not do that, but this picture can be found in the report. I will, with regard to time, I will skip a few bits now. So I will go to yeah, and another one. Thanks. Yeah, this one. Here I will dive into a little bit into those physical risks because I think that's the newest element put forward. I took this figure from a publication of the World Conservation and Monitoring Centre, Cambridge, UK. And they compiled a database, the Encore database, on relationships between companies on one hand and the natural capital assets on the other. And that goes as follows. So they identified all kinds of sectors. This is at the top of this pyramid. And within each sector, you can identify the crucial industrial processes, production processes, like, for instance, say 1 to 5. Those production processes, you can link them to all the different goods and services that we can find in nature. So that you can link them to the benefits of nature, so to say. And there's a standardized list of these ecosystem services encompassing something like 21 different services. These services are provided by nature, but not just by nature in general, but all kinds of aspects of nature, so to say, by different habitats of ecosystems or by soils or by specific species. So those we call the natural capital assets. And you can link these services to these different assets. So that gives you an idea of how sectors depend on what nature provides. And these relationships can be really strong or maybe very weak, but we focused, so we filtered all the relationships in this database on the really crucial ones, the relevant ones. And these relationships become under pressure when there are all kinds of environmental changes happening that affect these assets. So changes like pollution, climate change, drought, etc. So on the one hand, then we have dependencies, and these dependencies could be under risks when we have very strong environmental change. So we put that together with the financial information. Next slide, Jane. So we come up with this alluvial diagram. From the left to the right, we start with the money invested in terms of loans by banks, which the broad width part of this figure. Also, there's a lot of money in terms of shares from pension funds, and there's a little bit about insurance. So that's the money, the total amount of money of Dutch financial institutes that is related to the very high or highly relevant natural capital elements. So this is in total 510 billion euros, which is more or less a third of the total portfolio, the financial portfolio that could be investigated by DNB. So a third was categorized as very highly dependent on what nature provides us. And that goes mostly to the ecosystem services of surface water provision, climate regulation, and groundwater. So water services are very important to all kinds of industrial processes, so to say. The list, of course, it's huge. We have loads of business processes and ecosystem stuff. You can't read them, of course, but you can have a deep dive in the report. So this is only exposure. What companies do to secure their dependencies, that's up to companies. So that's the area of risk management. That's not investigated in this report. We only investigated the exposure. As a deep dive on this, we investigated also the individual ecosystem service of pollination. Next slide, please, Jen. So here we did the same, starting with crops that are highly dependent on pollination services by insects. So these crops, there are something like 100 different crops listed worldwide that depend for 95% on pollination processes. So one of these is cocoa. That is very dependent on a very minute little type of mite, some really ignorant, insects, so to say, and you can then trace back in what kind of different products cocoa is used. For instance, ice cream, chocolate bars, whatever. So you have a list of all kinds of products. These products are used by different sectors, economic sectors, and then we can investigate the amount of money invested in these sectors, and then you come up with a figure of about 28 billion in assets that is associated with this specific crop, depending on animal pollination. So you can repeat these kinds of exercises for all kinds of different crops. So these are the physical risks. Now I'll go to a few examples of other types of risks. Yes, thanks, Jane. Yeah, this is a transitional risks. So this is related to changing government policies. So on the left-hand side, we see a map of protected areas worldwide. This map also comes from WCMC Cambridge. And it has all the different protected areas in place worldwide that are present under some kind of status of protection. And if you have processing facilities, so company facilities within these protected areas or within the vicinity of those areas, you can imagine that this puts limits to these production processes. So all these companies will have to take these protected areas into account, and that they cannot just do whatever they want in these vicinities. Yes, that's it again. So we investigated the amount of money in Dutch financial institutes that can be related to these specific company locations. So we combined two maps, one of protected areas and one of company locations. And then we come up with 15 billions of euros you can identify within the vicinity of present protected areas. Well, next year in Kunming, China, we will have negotiations for a new policy period for the Global Convention on Biodiversity. And there's now this talk about expanding protected areas worldwide because biodiversity loss is still ongoing and we need a better protection status. So sometimes you can have scenarios already, spatial scenarios on what this new target will be. So there's policy developments ongoing on increasing the amount of protected areas worldwide. And so if you would, for instance, go to 30% protection of the share, 30% share of each ecosystem type that has to be protected in future, then the amount of money which is exposed to this protection risk goes up. This is in the end, it's something like 28 billion euros. Okay. I will now go to reputational risks, which is the next one. Yes, here we used a database compiled by a data provider on controversies. So controversies that are in public media, putting some kind of pressure on companies because of public interest. Well, there we found hundreds of different cases reported on environmental controversies. And several of those, you can relate them to biodiversity and nature. And you can also have a distinction in these controversies about how severe these controversies are. And in total, we found more than 70 billion euros exposed to moderate controversies, but also almost 5 billion euros to very severe environmental violations. So you can think of oil spills by Shell, which will affect the company value, and other types of, we used a database of MSCI to do this. Okay, next one. There's also another reputational risk I'd like to shortly mention. I see that in almost 15 minutes now. This is about deforestation-related activities. So you can also repeat that same exercise on zero deforestation. You can imagine that by using resources like palm oil, soil, or cattle, wood, that you might end up in areas where we have still this deforestation frontier ongoing. And we found like more than 80 billion euros exposed to these type of deforestation risks that companies do not report about. So this is about disclosure of company information for companies that we can relate to deforestation. So I think these companies have to improve, at least on the disclosure. Whether they do a good job or not, we cannot conclude. Several companies, so that's the amount depicted here in yellow, do address the deforestation risk in their reports. So to summarize, then, yeah. So for physical risk, we could identify 510 billion euros in exposure with high or very high dependencies. Next one, please. We have transition risks. We investigated those as well, related to government policies and, for instance, expanding protected areas. There's also, yeah, thanks for the next one. And the reputational risks are up to 100 billion euros, but 5 of those are very severe. So this concluded the results. Next, please, Jane. I will. Yeah. So the Dutch National Bank said, well, based on this result, we recommend that we need new standards for reporting on biodiversity, and these should be applied by companies, so the investors know which type of companies they invest in, and which would create some trust in how they manage the exposed risks. But also financial institutes should identify these risks in their own portfolios. And that leads me to the last slide. Another one, please, Jane. Yeah. Okay. So if we want to green the financial system, then we need several changes ongoing. So we call these the 3 levels of change. And there's a role to play for financial institutes themselves, for the financial supervisors like the Dutch National Bank and also other national banks, and also for governments to put policies in place to stimulate all of these actors to make a step further. So thank you. This is my story. You can find all of our material on the website. I even have included some QR codes. Next one, Jane. That's the last. Yep. These are the reports I talked about. And I think these slides will be shared later. Thank you.
That's fantastic. Thank you very much, Mark. Sorry for flipping through the slides in the middle there.
Oh, that was good.
Thank you very much. So that was really fascinating. Thank you. It's really good to hear about that in detail. If people have questions, please will you either hold on to them for the Q&A session or type them into the Q&A now. So we'll move on. Thank you very much, Mark. And we'll move on to our next speaker, is Theo Euro, sorry, Theo, for pronouncing your surname so badly. And Theo is at Queen's University Belfast, and he is going to take over now. Theo, are you good to go?
Thank you so much, Jane. And no, that was really good. And yeah, thank you so much to you and Orla for the invitation. And thank you, Mark. That was a wonderful setup for what I plan to speak about right now. So I'm hopefully going to breeze through some of the slides, since I perhaps will need to go too deep into the area of biodiversity and how UNCORE, the UNCORE data set works, since Mark did such a wonderful job in explaining. So my name is Theodor Codreanu. I'm a lecturer in finance in the Queen's School of Management. And I'm also a member of the Platform on Sustainable Finance at the European Commission. So one of the 57 members currently working up to 2022 on the EU taxonomy legislation, well, kind of background work that would eventually become legislation looking at the area of biodiversity, of water, of pollution and circular economy, and how that could be translated into meaningful thresholds across economic activities. So kind of preempting that I'm talking to you, I want to outline to you the results of a paper which I hope we'll be able to send through after this webinar to all the attendees as an attachment. The question is, what drives the adoption of corporate biodiversity policies? And I'm doing this with my excellent colleagues, Sergio Carvalho from University of Oxford and Francisco Ascui from University of Edinburgh. And instead of necessarily trying to provide this very wide account of all the different factors that perhaps influence corporate biodiversity policies, we wanted to look much closer into what Mark has just talked to us about with this, which is this area of biodiversity dependency risk, which we haven't talked much about, and we haven't understood, I think, too well yet to the societal, financial institution level, and also company level. So moving on to our next slide, what really prompted our study is a survey that we got to conduct around 2015 and 2016 of around 36 large financial institutions. And we were really wondering what is the level of integration of environmental data sets in investing and lending decision making. And what we found out is that carbon and water risk were largely well understood. When it came to other types of environmental factors that I'm going to go through in a bit, there wasn't much capacity in the financial system to really work with these new indicators, to understand them both qualitatively, quantitatively, and then even look at new financial products out of back of them. And the reasons for that were numerous. So banks said, well, we don't have really the IT budgets nor the personnel. It was ultimately also a matter of talent, as we in Queen's University of Belfast, we are launching a first sustainable finance course, which really looks at the intersection between green data, financial services, and also data science and IT. These are all skills which are, of course, if the financial sector, would be very strong in financial risk, sometimes incorporating IT skills with environmental skill sets is not necessarily something that banks do it naturally. So there's a lot of investment that we need to put in there. Moving on next, we've seen that we've also looked at the ESG research providers, environmental social governance provider space, and what kind of data and methodologies they have with respect to environmental and natural capital indicators. And as I mentioned, greenhouse gas emissions, water risks were very well understood. If you look at biodiversity and ecosystem impacts out of the 66 global data providers, that was as of 2016, and we have made some progress since then, but we were still lagging massively. There were only 16 organizations that at the time could give us at least a methodology and ideally some quantitative data sets that we could look at in the context of investment decision making. And so really the questions, just moving on to the next slide, please. The key questions that we are trying to understand is, first of all, what's this distribution of biodiversity policies across different sectors? And the reason for that is tied into Mark's argument, is that we have to look closely at companies and at assets and how they perform with respect to biodiversity and environmental risk. And then these get, you could then follow them throughout the financial system. But ultimately, you have to start to where this impact and dependency occurs. So we're trying to map that, and we do so at the subsectoral level. And so to give you a sense of the data, if we move on to the next slide, what we're trying to do is we take the Bloomberg World Index constituents from 2000 to 2018. And so these are really the top 85% market capitalization across each sector across the world. So you end up with a really large data set of publicly listed companies. These are all the companies in most pension funds, or at least Western pension funds, would be invested in across the world. And these would be the companies that fundraise mostly across equities, bonds, syndicated loans, and so on. So these would be really those that investors could really engage with directly. And Bloomberg has quite a nice data point, which gives us a baseline. It's in no way, I think, necessarily robust, but it gives you a nice baseline to understand what is the state of biodiversity concern across different companies and sectors. So with Bloomberg, we are able to match 0, 1, just have a dummy variable, understanding if a company has a biodiversity policy or not in a given year. And so if we move on to the next bit, what we do is, and I won't dwell too much onto this, but we are able to take the Encore database, which Mark excellently described. And for each of these sectors, go from the different types of biodiversity dependency risks. And these are categorized over here. So these can be direct physical inputs. So if you think for example, fibers or animal-based energy or genetic materials, for example, going into cosmetics and so on. You could look at biodiversity dependencies in terms of enabling production processes, and here we can think of pollination. We can think of biodiversity dependencies as mitigating the direct impacts. So if we're thinking of the ability of the atmosphere to dilute certain emissions, or the ability of soil to filtrate water and so on, you have bioremediation processes, and then last but not least, you can have nature in a way protecting your production processes through nature-based pest control or climate regulation. So, for example, the ocean even absorbing some of the heat that otherwise would make our atmosphere unbearable at the moment, given the amount of GHG that we have in the atmosphere. These are all types of ways in which nature is really providing something really tangible for our economic sectors. And so if we move on, we take all of these types of, so if we move on to the next slide, please. We take all of these types of dependencies, and we are able to provide a very rudimentary scoring for each subsector. We try to understand which type of biodiversity dependency risk is more salient to which type of economic sector. And so if we move on, we simply run the statistics. We run a simple logistic model. So it's a bit like a classifier. Is the company concerned or is it not with respect to biodiversity? And we put in all of these different types of biodiversity dependencies. And we're trying to understand whether indeed companies that are more exposed to biodiversity dependency risk, if they actually respond to it. And so if we move on to the next slide, this gives you a feel of the fact that biodiversity policies in companies have lacked climate policies worldwide. And so if, out of these 11,000 companies, about 3,200 have even show a remote concern about climate, that number is well below 1,800 companies for biodiversity risk. So we're in a situation where biodiversity lacks climate, and there's a few reasons for that. One of them is also because we don't really have a world like we have with the Paris Agreement. We don't, biodiversity is not just one indicator, not just carbon in the atmosphere, for example, although climate risk is not just one indicator, but definitely the amount of carbon that goes into the atmosphere has rightly so gained so much attention. With biodiversity, it's so there's so many other indicators that at the moment, there is still a lot of confusion on how to technically solve this. So ideally, we would also come with the biodiversity loss target that we could then trickle down to the company level. That is not doable necessarily in practice, given that this indicator, unlike carbon, is very local. So, carbon, 1 ton of CO2 emitted in Dublin is the same as 1 ton of CO2 emitted in Beijing. Well, losing perhaps some types of local species in Dublin won't have the same consequences, the same other species, let's say, on the other side of the globe. So moving on, I wanted to also give you a feel of the different industries that are concerned about biodiversity. So this gives you a percentage, how many companies out of the total number of companies in that sector, which are listed companies, really have a concern about biodiversity. And I want to highlight now at the bottom, there's that light green line which says financial. So as of 2018, just under 10% of financials of banks, listed asset management organizations, insurance companies have a biodiversity policy. So although the financial sector is starting to ask about biodiversity in the environment, the financial sector itself is quite lagging in being able to integrate these types of risks, understanding it, and then nevertheless asking of its companies. So if we move on, I'm just going to go probably a bit faster onto some of these, and I will circulate the report. But we can see countries like France, Japan, Malaysia, and Turkey, for example, leading on the adoption of these policies as a percentage of the total number of companies. If just to give you a feel, US is not even here. It's just 9% of US listed companies, for example, even make any progress. And if we move on, just to another slide, please. Yeah, so if we move on to our statistics, what we are able to show with this study in a nutshell, that yes, those sectors that are more exposed to biodiversity dependency risk do respond to it, do respond with being more concerned about biodiversity, besides those industries that are more exposed to the fact that biodiversity helps mitigate their impact on the environment. So as I said, for example, filtration. So if you have, I don't know, waste and your wastewater and your soil provides some filtration capacity, for example, there doesn't seem to be any concern of the fact that companies do benefit from nature, from a lot of these in terms of basically regulating their impact. And I'm just going to go at the moment at the last slide of the presentation, please. So one more, please. Which is a final point that I'd like to make, which is we have to really understand how we finance industries, which Mark again really nicely outlined, and understand what are the levers that finance can use to enact change. And so if we look at how, for example, the food chain is, or the food ecosystem is really put together, on the one hand side, you have large companies like, those that we could say they're input companies. So if you think of Monsanto, right, kind of looking at seeds, they are financed through listed equities, bonds, and syndicated loans. Then if you move into a bit in the center, farmers and growers, these are usually very local plays. It would be commercial banks, like in Ireland, we have the likes of Bank of Ireland or AIB and so on, providing finance to them. And then if you move again from farms to processing companies and traders, you have commodity finance. And then as you move further that along towards consumers, again, you get into this area of listed equities, bonds, and syndicated loans. So in order to be able to understand biodiversity at local, global levels, we also need to have investors, and we need to have everyone, commercial banks and pension funds around the world, to be concerned with this and enact where their base industries lies. And we need to understand better this part. So with that, I think my time is up. So I'm very grateful for the invitation, and I look forward to your thoughts and questions. Thank you so much.
Fantastic. Thank you very much, Theo. That was brilliant. Really, really interesting. Thank you very much. So we'll move on to our final speaker this morning. So Orla Delagi is the Executive Coordinator for Natural Capital Ireland, and she's going to talk about a project that we've just been involved with Irish companies. So over to you, Orla.
Yes, thanks very much, and thanks everybody for joining this morning. I'm just going to get my slides up. So next slide, please, Jane. So I'm going to give the kind of Irish perspective on a study that's been done here. Just to give the context for it, it was commissioned by the National Parks and Wildlife Service, and it is part of the National Biodiversity Action Plan. So the government wanted to understand how the private sector could better contribute to Ireland's national biodiversity goals. So the project was led by Optimise, which is an Irish consultancy led by Craig Bullock. Micheál Ó Cinnéide is the former director of the EPA. ACOM, who I'm sure you all know as a UK-based consultancy, and ourselves in Natural Capital Ireland. So next slide, please. I'll just give you an overview of the study. So it consisted of desk-based research. We did an online survey of businesses and we had 122 respondents. And we followed up then with semi-structured interviews. And we were largely focusing on 13 sectors using the European NACE codes. I see Theo used the Bloomberg code. So, you know, those sector classifications can actually be really important. But basically with the NACE codes, we eliminated more public sector facing sectors and just focused on the industry sectors. So next slide, please. I'll show you what the responses were by sector. We had the largest response from the agriculture, forestry and fisheries sector, and hospitality and tourism had a good outing as well. The other section is I suppose sectors that identify, or businesses that identified with multiple sectors, and then we also had some kind of NGOs and consultancies responding as well. Next slide, please. So the first question we asked is this impacts and dependencies question. We asked, does your business depend on or affect any of the following items? And I see that kind of approach is reflected in the two studies that we heard about earlier this morning. So the highest dependencies were on water quality and landscapes and natural heritage among Irish businesses. And that's perhaps not surprising, given that our top responding sectors were from the agriculture and tourism sector. But I think it's good to know that those sectors are recognizing their impact and dependencies on those two elements. And the water quality piece I thought was particularly interesting because over half our water bodies nationally do not meet good status. So that declining status of water quality in Ireland is a business continuity issue. And I think there's a way to go to increase business understanding of the multiple impacts and dependencies, because, you know, we were surprised, for example, that there was only 5 food and beverage companies that noted their dependence on high water quality. We were, you know, that seems quite low to us. So I think there's a way to go, and I'll describe why that is as I move through. Next slide, please. So we also asked about the perception of environmental risk, whether businesses perceive these things to be significant, moderate, or slight risks to their business. And we can see that from a severity perspective, so the dark kind of turquoise bar, climate change is the leader with severe storms coming right behind, but kind of overall, do businesses perceive these as risks? Yes, they do. And then the risk of polluted waters features, but not very strongly. That kind of contrasts with the previous finding that businesses depend on high water quality. And we thought also that it was interesting that soil degradation did not really feature as a top risk, given the importance of agriculture to Ireland's economy. So I think overall we noticed a lack of understanding that all of these risks are deeply and intrinsically interlinked, because, you know, as Ireland's climate changes, these are a lot of the outcomes that we can expect to see. And ecosystems have a role in helping us to adapt to those changes. But biodiversity will be impacted by things like severe storms, by flooding and drought. So you can't really treat them in isolation. So next slide, please. Just to kind of highlight, I'm going to move away from our study for a moment, just to highlight that awareness piece in Ireland. We noted the top study in our report, this RECO Europe study, which shows that Ireland ranks the lowest in Europe for recognizing the benefits of sustainable business practices. So that study found that 60% of Irish businesses believe that sustainability is nice, but not a critical aspect of business. And then the bottom one I just noticed, I think it was out yesterday, the Ibec CEO survey. They surveyed CEOs for their top business challenges for 2021. And you can see how low the low carbon transition agenda is, and then also that biodiversity doesn't feature, So I think that awareness and understanding of biodiversity as a core business issue is not quite there yet in Ireland. Next slide, please. But we also focused on actions taken on biodiversity. So we asked businesses, thinking of their own company, where did they feel they were on their biodiversity journey? 11% said they were just beginning, starting to consider biodiversity. 36% said they'd commenced some action, but could do more. 27% had a well-developed biodiversity strategy, they said, and 26% didn't know. So kind of a mix really of companies along that biodiversity journey. And just to delve into the actions, next slide, please. We made a distinction between practical actions and then strategic actions, which I'll speak about next. But among the practical actions, actions on pollinators were the most popular. A lot of companies as well, about over a third, were managing or surveying existing habitat or creating new habitat. And these, activities for staff and engagement days were also really important. And what you see pictured there is Hannah Hamilton, formerly of the Natural Capital Ireland. She's on a staff day out with Cook Medical, and that picture is actually taken from the Business in the Community Biodiversity Handbook. So I just want to take this opportunity to direct you to that handbook. It's very good, and thank BITC for their support on this project. Also on the practical actions, the All Ireland Pollinator Plan came through strongly as a very successful initiative. It was very good for engaging employees. So it was mentioned quite a lot. But just moving on to the next slide, that distinction between practical and strategic actions. So this is where I suppose Irish businesses kind of fall down. They have been taking actions, but there's a gap between the CSR realm of things and the strategic business critical realm of things. For example, only a third of businesses have reviewed their impacts in the supply chain. And we know that that's often where the greatest impacts lie and dependencies. So only 2 companies from the food and beverage sector had actually reported that they had done this. And so we were really surprised at that. And just next slide, please. This is quite linked. What drives companies to act on biodiversity? Well, here, company values was the clear winner. So about 73% of companies said it was their company values that were driving them to act on biodiversity. But down the bottom, then you have the business opportunities, the competitive advantage, and change in consumer and investor preferences. And that's really what I would have expected the core drivers to be. And I think that speaks to the lack of understanding, or the lack of broad understanding of the biodiversity question in Ireland. So next slide, please. So just to kind of explain, one of the main purposes of this project was to develop a list of options for how businesses could better engage with biodiversity in Ireland. And part of that was the development of a business and biodiversity hub for Ireland. Some of you might be aware of the EU Business and Biodiversity Platform. It's excellent. And this was kind of how could we set up a national platform, or was that needed? And what you see on screen is a list of kind of all the features that businesses wanted from this, potential business and biodiversity hub. I didn't put a graph because there was actually pretty even split between all of these things, and I think that indicates that companies are at really different stages on their biodiversity journey, and they have different needs, along that journey. So the hub would have to provide a lot of these different things. So just to finish up, next slide, please. The 4 key recommendations arising from this project were to improve that awareness and understanding, and move biodiversity beyond that CSR zone. Also to engage with businesses with land holdings, because obviously they're the ones that can do the most the quickest, I think. Also, thirdly, to create guidance for business. There's a lot of excellent studies, as we've heard this morning, and research internationally and guidance internationally, but not so much tailored for Irish businesses. And so kind of we're calling on government and other NGOs to help produce that guidance. But I did mention that BITC Biodiversity Handbook as a good starting point. And finally, this business and biodiversity platform, our report from this project is coming out in the next few weeks, so keep an eye out for that. And in that, we've set out a range of options for how the business and biodiversity platform could work. But if you're a business on the call or an interested party, and you have ideas for how that platform could work or should work in Ireland, what's needed, please do get in touch. And just next slide, please. We have just ways that you can engage with Natural Capital Ireland. My email there is at the bottom. And with that, I'll pass back to Jane. Thank you.
Fantastic. Thank you very much, Orla. Really interesting to see the results of that survey there. Thank you very much to all our speakers. We have about 9 minutes for Q&A. There's a few questions come in through Zoom. I don't know whether there's any questions come in through the live stream. Maybe Fiona Smith, who's the Natural Capital Ireland Communications Officer. Fiona, if there's anything there, maybe you can pass it on to me.
We have none on the live stream so far.
Okay, so we'll focus on the questions here. Thanks, Fee. So the first question is for Theo. So this is a question from Tom Popple, who is one of our steering committee members in Natural Capital Ireland. And the question is, beyond the desk-based evidence undertaken, have you engaged actively with businesses on your findings and the model? And if so, who and what has been their reaction? And are any businesses taking credible action in this area following your engagement? So a question around engagement with business for you there, Theo.
Sure. And thanks a lot for that, Tom, and everyone on the call. So the study really shows, it's a bit binary in that it shows, is a listed company, does it mention biodiversity in its annual report? Does it have a policy to address it? So in that way, it's just a baseline telling you, is there even the slight concern? And if there is none, there is no mention of it, Bloomberg will not classify it. So you can be assured that, for example, for the financial sector, for the 90% of listed financials and the Bloomberg index, if it just means they don't have any mention of biodiversity in their annual report and the biodiversity policy. So on that front, there's not much to engage with, and we don't even need a model to just say that the concern is just so low. The model then just looks very briefly, it's quite exploratory. We are including now environmental policies and other variables in, but I am engaging at the moment through the European Commission, through the Platform on Sustainable Finance, including through the working group. And I think the question is how meaningful these biodiversity disclosures are, and not whether they do it in the first place, although that's the first step. I think there's the quality is still very poor, and we've talked about some of the issues, but I think with the advance of green investment, including sustainability bonds and so on, financial institutions could do a great job in imposing through their covenants. So if you want to have debt, if you want millions of dollars from capital markets, from pension funds, you should be able to report accurately on your biodiversity exposure and tell us what you're doing. And that is currently not occurring. So I think there's a lot for us to do in that space. And I'm aware of the time, so I'm just going to leave it to that. And please add me on LinkedIn, and I can take any of these discussions offline.
That's great. Thanks very much, Theo. Moving on to another question from Alan, me. So beyond understanding the risks to sectors and companies, can natural capital modelling be used to understand the risks on communities and regions from biodiversity loss? I'm not sure who that question was directed to, but would somebody like to answer that one?
Yeah, I can give that a go. I think, yeah, natural capital modeling or natural capital accounting certainly has a role to play in communicating what communities lose if biodiversity is lost. You know, natural capital provides that holistic view of the environment and how it impacts on humans. And just yesterday, I was reading the UK natural capital accounts for 2020, which I'd recommend anyone to go and read, because it talks about, you know, the value of green spaces, and clearly during the pandemic that has been highlighted no end. So that sort of thing, I think, can show that natural capital accounting can show that if we lose biodiversity, you know, communities lose well-being and they lose you know, and it has that valuation piece, but it's not about putting a price on biodiversity.
Great, thank you very much, Orla. Does anybody else want to come in and answer that question? Mark?
You mean the same question on Alan? I think I totally agree with Orla about this. So I think it even started off, this whole valuation of ecosystem services, with the societal values that nature has. So we started off with talking about ecosystem services, but now it's called nature's benefit to people. So that's the core of all this natural capital science, so to say. What we did with the central bank is trying to translate that into something like exposed real money, but that's a different thing than a value. And of course, a lot of people will recognize that there's a total difference between value and price. So the values of natural capital are even much higher, especially if you talk about climate change consequences.
Absolutely, but those prices get the attention from certain sectors. Absolutely. Thank you very much, Mark, and thank you for the question, Alan. So one final question again from Tom for Orla. Despite the relatively high response rate to having a well-developed biodiversity strategy, how strategic do you really think biodiversity approaches are? So fantastic as it is, supporting pollinator plans feels like a bolt-on activity opposed to a business-critical biodiversity strategy. Is there a risk it's just CSR and we're a lot further away on business action? That's a good question, Tom. It was one that I scribbled down as well, is nobody's putting pollinator loss as a risk to their business, but they're all engaging in pollinator activity. So Orla, do you want to address that?
Yeah, sure. I think that's it. We don't want to be too hard on Irish businesses, because what came through from our survey and from the interviews was that there's interest and passion there for sure, but then as I said, there's no national guidance. So, you know, it's all very well to say that, you know, businesses should understand that, you know, they depend on pollinators, they depend on the natural environment. But if there's no, I suppose, if people aren't kind of providing that guidance right on their doorstep, then, you know, maybe it's not surprising that businesses don't have that understanding. But I agree, you know, it's rare to find a company with either standalone or incorporated, you know, strategic biodiversity strategy that talks about business critical issues, or talks about biodiversity as a business critical issue. So yeah, we have a way to go.
Great, thanks very much, Orla. And just, sorry, Mark, do please come in.
Yeah, if you allow me time. Yeah, we did more or less a little research in Holland about the different strategies that companies use in integrating biodiversity in their business models, and we used a typology of these strategies, distinguished like really inactive companies that only will respond when they have to by law, or reactive ones that are willing to respond to societal concerns or concerns of investors, to active ones who really take up this and see it as a strategic adventure, to really proactive ones. So we distinguish this typology. It's in this business and biodiversity report that I showed. But we found in the end that most of the companies that we were investigating, a small sample, were on a reactive strategy. So most of them just respond to outside factors and drivers of taking up this issue seriously. So and only a few are on the front of being active. And I think that's, even though it is a small sample, it was confirmed in more international literature that that's the basic strategy. But I think that's the status as it is now on this journey, as Orla said, journey of further integrating biodiversity in business models and taking up these concerns and see what the business advantages are.
Great, thank you very much, Mark. And we've come to the 11 o'clock point, so we'll draw to a close now. But certainly, obviously, this is something that's really gaining traction. We've seen through the studies presented this morning, and this understanding of dependency, of risk, and of looking further back in the supply chain is obviously something that is starting and will continue into the future. So thank you again to all of our speakers this morning. We will circulate the reports and papers and links that have been mentioned and the slides for this morning. And thank you all very much for attending and for your participation and questions. So thank you very much. Good morning.